Bank runs in China. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Got my morning stein of coffee, I'm just about to finish, and I thought we'd have a look at some articles discussing, well, the bank runs that have happened in China. This was sent to me by several viewers. Now, it's interesting because at the moment here in Australia, there is a dialogue going on. Just adjust the microphone. A dialogue going on about, well, the potential for bail-in risk that's presented by a banking system. There's a push by one nation to make amendments to the Banking Act to explicitly protect people's deposits. Some are arguing against even having that protection. I mean, if you remove that protection, then that would most certainly have a bank run. Others are concerned that it's not necessary, and even discussing it will stoke fear in the community and will drive people towards a bank run. I mean, what would happen if everyone started flooding the banks, demanding their money? What would happen? We're starting to see elements of it here in China. That's why you're getting people who don't even want you to talk about it. Why are you getting people who don't even want you to talk about it, don't want it even considered in the media? I'm sure most people who are watching the channel have, are concerned about it. If they are, they're taking steps to mitigate it. I mean, are you worried about a bank run here in Australia or bail-ins? I think I'd be more worried about a bank run, particularly now with the social media world, than I would be about bail-ins. So let's have a look. A spate of bank runs breaks out in China, fueled by social media, of all things. So social media fueled rumors about banks collapsing are popping up at an unprecedented frequency in China, forcing regulators and even the police to step in to calm depositors. Just since the past month, worried savers have descended on 3 banks to withdraw funds amid rumors of a cash shortage that were later dismissed as false. Over the weekend, customers rushed to a bank in the northern Hubei province to take out money, prompting local regulators to publicly vouch for the soundness of its lenders as the police halted the run. Confidence in the $43 trillion banking system is eroding among the nation's more than 1 billion account holders, threatening a cornerstone of China's rise into an economic powerhouse. After several bailouts and the first bank seizures in more than 2 decades last year, the pandemic outbreak and its economic fallout have exacerbated an already shaky situation in the world's largest banking system. The perception Chinese savers had of banks being risk-free is changing, even though in nearly all recent cases their deposits have been protected. Zhang Shao, a Shanghai-based analyst at China International Capital Corp. Once a rumor like this spreads, it brings immediate liquidity risk to a bank. And that's the problem. That's the problem. People will just start spreading these rumors to see the carnage. To see the people rush frantically to the banks. I mean, another perspective is to just assume that your money in the bank is at risk. It's just to assume it's at risk and to have strategies in place to deal with that and to plan that. Don't put all your eggs in one basket. For decades, deposit taking has provided a stable and low-cost funding base for China's financial market, playing a key part in the rise of its economy to the second largest in the world. Chinese households hold about 90 trillion yuan, $30 trillion, of bank deposits, more than anywhere else in the world. And there you go. Regulators are now not only seeking to soothe nerves publicly, but are also raising the protection to preserve this cushion for banks. The run in Hubei came after authorities kicked off a pilot program to limit large transactions in the province. Oh, there you go. Wonder, don't we have something similar like that, limiting large, well, at least cash transactions in our state, our country? Even though we're all moving cashless, the 2-year program, which is set to expand to Xinjiang and Shenzhen in October to encompass 70 million people, would require retail clients to pre-report any large withdrawals or deposits of 100,000 yuan to 300,000 yuan. Well, there you go. See, China is less tracked than Australia. Here it's like 10 grand to 5 grand, depending on who you talk to. Okay? China is less tracked than Australia, everyone. Every time you take out 5 grand, it's reported. Every time you buy some gold, $5,000, it's reported. It's all reported. We're surveilled. Welcome to Australia, guys. China is less than Australia. Bloody hell. The China Banking and Insurance Regulatory Commission on Saturday again warned that lenders are facing a surge in bad debt as the economy sputters at its slowest pace in 4 decades. While stopgap measures, which have included rolling out debt and delaying loan payments, have limited an immediate surge in bad debt, the regulator said the fundamental issues of poorly managed banks and the deteriorating ability of companies and individuals to repay loans are still far from solved. They are also asking banks to forego 1.5 trillion yuan in profits this year by offering lower lending rates, cutting fees, deferring loan payments, and granting more unsecured loans to small businesses to help the economy. Authorities have more than 3,000 banks to oversee, most of which are small, rural entities without ready access to capital. In another unprecedented move, China now plans to allow local governments to use about 200 billion yuan from bond sales to help smaller banks replenish their capital. The industry overall may suffer an 8 trillion yuan increase in bad debt this year, S&P Global has estimated. Small banks are facing 349 billion shortfall in capital, according to an analyst by UBS Group AG. Putting that figure at only 50 billion, the regulator said the shortfall could mean slower profit growth or even starting profits at some institutions. Corporate bonds are also suffering, adding further pressure on banks. About 80 billion yuan worth of Chinese bonds defaulted on and offshore so far this year, the most in the last 3 years, according to data compiled by Bloomberg. So squashing rumors. In the most recent episodes, authorities stepped in last month to halt bank runs at 2 local lenders in Hubei and Jiangxi. On July 11th, savers rushed to withdraw money from the Henzhou Bank Co., also based in Hubei, before the police put a stop to it. In response, the local offices of the People's Bank of China and the CBIRC said in a joint statement that Hengsheng Bank and its branches are legitimate financial entities where any savings under 500,000 yuan are protected under China's deposit insurance regulation. They reassured depositors that their money is safe and urged them not to blindly withdraw savings. Police took people into custody, issuing reprimands to those spreading rumors, according to the statement. The bank said in an email reply on Wednesday that the city government is actively dealing with the issue and calls for less publicity for fear the incident leads to regional systemic risks. More broadly, regulators have been working on a plan since last year that would see more small banks merge to shore up their strength, but so far little effort has come to fruition. Investors were spooked last year when authorities seized Inner Mongolian-based Bushang Bank Co. in the first state takeover since 1998. They have since engineered rescues by having state-run entities inject capital into the struggling lenders such as Bank of Jinzhou Co. China has too many banks, said Zhang. Quite a few of them are weak in corporate governance and earning capacity. A better option is to take a more proactive approach to restructuring those regional banks. So there we have it, everyone. What do you think? Bank runs in China. Let's jump here and look at another one from Bloomberg. So just since the past month, borrowed savers have descended on 3 banks to withdraw funds amid rumors of cash shortages, later dismissed as false. So it's the same thing. Confidence is eroding. People are making bank runs. And, well, just timely that this is all happening in China, around the same time when discussions regarding deposit bail-in, cash transaction limits are being, well, pushed through here in Australia, or being discussed openly in Australia. I mean, I honestly think the government would do every single thing they could to prop up the banks, one way or another, before they start to implement bail-in. I'm not really concerned of it as a risk. I know it's happened in the past, but that was a different time. That wasn't even this country. So I think what they'll do is they'll inflate our money to being near worthless before they implement bail-ins. That's my concern. That's my concern. I think they'll start, doing whatever they can to pump up property, to keep property going, so you don't get a sharp fall in prices. I mean, APRA is stopping the banks from even having to reevaluate their assets. They even have to reevaluate their profits, or their holdings, their mortgages, the houses that they're all sitting on, which is propping up so much of our banking industry. And you'll see it. We looked in a previous video. Home builder. It's starting to push up the price of new homes. Right there. They'll just keep intervening. Keep intervening. Keep intervening. In some ways, I think that's a greater risk, because we're all going to pay for that one way or another. What do you think, everyone? Do you think this could happen here in Australia? How do you think people would respond? Have you stashed some cash just in case? It's a sensible thing to do, just because, if the phone lines go down, then you can't spend. As always, let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. Thanks for watching, guys. Have a great day, and I'll see you next time.